oh, look, the powers that be have this under control. What the Fed's doing is working. It's down from 7 to 4. How great. But 4 is still extremely high. It's double their so-called symmetric target of 2%. And by the way, even 2% inflation, if we had that, that still erodes your purchasing power of your dollars, significantly over not such long periods of time. So I think persistent high inflation, despite what the Fed's doing, ultimately shows that the emperor has no clothes. But as far as, I won't give you a date. I'm not going to do that. But I will give you what to watch out for. Is watch for when the jawboning turns into reality. Let's see what the Fed actually does. If they finish the taper and they don't immediately jump on with rate hikes, I think that'll be a big signal.
I'm more curious as to how things react to the news and the actual news itself. So gold went down, the dollar was up, the stock market, as I've discussed, was down. It doesn't seem like gold's acting as a safe haven, right? Going back to our previous discussions, gold has at some points reacted stronger to the dollar than at other times. Today seems to be that case. It's reacting to the dollar and not acting as a protection, a hedge against equity volatility.
Yes, this is actually something we've talked about numerous times over the last year, how gold's 50-year relationship with interest rates being the number one driver. Of course, it responds to many things, a war or all kinds of things. But the number one driver since we went off the last vestiges of the gold standard in 1971 has been interest rates, and particularly real interest rates. And over the last year plus, we've seen gold responding more directly to the dollar's movements, which is an aberration. But let's pull back to the bigger picture of just the day, David. We've talked about this before too. Gold tends to anticipate. It tends to lead inflation. So I think it did, for all the people that are unhappy about what gold did in 2021, I think it did a fantastic job of signaling inflation in advance in 2020. Now, why isn't it doing that now? Well, I think a lot of investors and traders out there think that we already have the inflation. This is it. 6 pushing 7% inflation. This is what gold was signaling. And we're near peak inflation. I've seen headlines saying that. With the kind of people who read my newsletter and most of your audience and the people who go down to the mom and pop coin shop, they don't see things that way. But these traders in Chicago, New York, London, these places, I think they're still drinking the Kool-Aid. I think they still think, some form of the transitory yarn is true. That we've peaked. It's gonna be a correction, but it'll be okay. So until that changes, I don't think gold will be the kind of signal we're hoping for. But here's the big takeaway. For all that gold has gotten whacked, nonsensically whacked, every time there's been an inflationary headline over the last year, because the Fed was going to tighten and that was going to be bad for gold. Now we have, just 30-year type record numbers in CPI and PCE, huge headlines. And we have the Fed minutes now talking about not just, the taper and not just bringing rate hikes forward, but actually reducing the balance sheet. And I don't think they will, but they're talking about it. These are huge headline factors that over the last year, this unusual year, have really been bad for gold. So my question is not, well, why isn't gold doing better? My question is, why isn't gold going down? Why aren't these factors that have whacked gold so hard over the last year not pushing it down? As you and I speak, it's still over 1,800. I think that's quite striking. I think it's a sign of a change in the air. I think there is something different in the precious metals or monetary metals space. Now, exactly what that is, that's where people, they make up all kinds of explanations. I could make one up for you. I think we'll see. But I think it's a significant signal that people should be watching. Something has changed, David. The whack-a-mole hasn't done its job this week.
Okay, so let's talk about that whack-a-mole. Now, I'm getting the sense that you disagree with the traders in New York and Chicago and London because they're projecting transitory inflation, which you disagree with. Okay, so assuming the gold market at large has been wrong overall about their inflation outlook, at what point will they start to realize that they are wrong? Do we need higher inflation still?
Not necessarily. I think you can have it reduce. We get maybe a 7 handle next, maybe not, and it goes back to 3 or 4. That will seem like a reduction. It might seem for a while that, oh, look, the powers that be have this under control. What the Fed's doing is working. It's down from 7 to 4. How great. But 4 is still extremely high. It's double their so-called symmetric target of 2%. And by the way, even 2% inflation, if we had that still erodes your purchasing power of your dollars, significantly over not such long periods of time. So I think persistent high inflation, despite what the Fed's doing, ultimately shows that the emperor has no clothes. But as far as, I won't give you a date. I'm not going to do that. But I will give you what to watch out for. Is watch for when the jawboning turns into reality. Let's see what the Fed actually does. If they finish the taper and they don't immediately jump on with rate hikes, I think that'll be a big signal. And if they do jump on with rate hikes, but real rates remain strongly negative, maybe even more negative, then that will show the emperor having no clothes. And the big one, you talk to, I think, some of the more responsible people out there, the Lynn Aldens of the world, and some of the really thoughtful people out there, is when it becomes evident that the Fed needs to do more, and they're not, like, say, because of the enormous debt that the U.S. government has and how unmanageable that becomes at higher interest rates, I think that's when really it becomes evident that the emperor has no clothes. Like when everybody has this sense that the Fed should be doing more and it's not.
Okay.
It's behind the curve. Everybody knows it's behind the curve, and they're denying it. They're not changing their course. I think that's when things change, David.
All right. Well, you did promise the audience you'd go out on a limb today. So barring the fact that you're not going to give a date, suppose this happens at some point in the future, that scenario that you just described, what will happen to the gold price?
I think it goes up. I think history is on the side of gold going way up. I think it takes silver with it too. We've talked about how silver seems to be becoming unglued from gold.
Yes.
But for now, it's still regarded as a monetary metal. It is the word for money in many languages around the world. And, whatever may happen to silver in the future, right now, if there's a sudden sort of, that heart-grabbing moment where there's fear, that people want a safe haven, I think it's very likely that silver will track with gold. I appreciate you not putting my feet to the fire on a prediction of both what and when, but I do think it happens this year, David. I don't see how the pretense of the emperor having his beautiful clothes, of being in control of inflation and the economy and everything, I don't see how that lasts this year. Okay. At some point this year, that narrative comes as unglued as the transitive one.
All right,
Sorry,
so sometime this year is transitory. Sometime this year is good enough for most people. Now, what about the magnitude of the rise? Can you give us an estimate?
I think new all-time nominal highs are the very least we can expect.
Nominal highs, okay. You stress nominal. Why not in real terms? I know in the real terms, I think 1980.
I'm not sure what that number is today, but in real terms, I think that takes us close to $3,000 gold. Nominal terms is easy. Real, it depends on the level of panic.
Nominal terms is easy. Can I quote you on that?
Yes, you can.
All right, fantastic. Well, that's only $200 from here. It is.
Yeah, that's not so far out on the limb.
It is not. Although people have been not to put you or anybody in particular, but a lot of people have been saying it's only been $200 for a long time. Gold's been stuck in a range for a very long time, and I think what investors want to know right now from you, which you've discussed already with me, is it's a catalyst for this push, because everybody is expecting gold to push another $200 higher. It's not going to take much, but the question is what, right?
Sure. Well, I think that's what we just answered. In my view, it is the perception falling away that the Fed actually has control of this, that inflation is such an easy, we got the tools. Every time Powell talks about, if inflation rears its head, we'll take care of it, no problem. Doesn't even be, like I remember Bernanke, when he was asked hard questions, he had this vein would pulse in his forehead. And Powell doesn't do that. He seems like quite the cool cucumber on this. But I think it's Fed BS, and I think that will become evident. I think that's the catalyst. When people are like, holy cow, this is real. It's not going away. You cut off the head of the Hydra and 2 more grow back. That's the catalyst, David.
Okay.
There could be something else. There could be a war. There could be something, but those are not predictable. Those are true black swan events. And then they could be tailwinds, but we don't need any of that. I think the Fed being revealed as not having the clothing it's regarded as having will be enough.
Well, Well, let me put your feet to the fire on some other things besides the gold price. Let's talk about inflation first. So we know you don't think inflation is transitory, but that could mean that either inflation has already peaked at current levels and will maintain its current levels for some time, or you think inflation is going to go higher. Which of these scenarios is more likely?
I think inflation will, the monthly spikes, may go up and down. I think we're going to see persistent high inflation, and how much higher, like I expect it to peak and roll over a bit. I'll be honest.
Okay.
I don't expect it to just keep going up and up and up forever right now. I don't think we're there yet. But if the Fed's response, and if, writ large around the world, if government responses to high inflation actually do create a recession, which is the traditional cure for high inflation, I just don't see any of today's governments or the populations being willing and able to take that pain. So I think the governments come rushing back to the rescue. They do a U-turn on their policy, and they put more gasoline on the fire. So what I'm saying is I do expect inflation to go much higher, but I can see it correcting, or I can see it rolling over first and then going higher.
Okay, so what about interest rates then? Can they raise, they being the Fed, can the Fed raise rates 3 times? As the dot plots have last predicted?
Well, remember the dots are changing. We're getting some new Fed members, so I'm not sure how much weight to put in that dot plot. And if it's 3 times, but they're 0.25 increases, that's peanuts compared to where they need to be. So I don't think that's highly meaningful. What things to watch out for is, do the rate hikes come forward? Are they bigger than expected? Did they do a 0.5 at once or bigger? Because of persistent high inflation, that would really shock things. And if the market can deal with a 0.5 or 0.75 rate hike all at once, I will be very surprised. That's a forward-looking statement for you in the audience there, David.